Well, we just got the May jobs report. It was, as both Brian and Jared characterized it, perhaps a Goldilocks report, not too hot, not too cold. Non-farm payrolls coming in below estimates with a gain of 559,000, unemployment rate ticking down to 5.8%. Average hourly earnings up year over year on a 2% basis, month over month, 0.5%. Of course, we like to dig beneath those headline numbers, and for that we bring in our Brian Cheung, who has been doing just that. So, Brian, what are some of the other numbers within the report telling you, including about sort of the broader workforce and who's getting a job, who wants a job?
Yeah, absolutely, Julie. So we already know the headline numbers. We're watching the market reaction, but want to call attention to things like the labor force participation rate that was highlighted, I understand, earlier at the top here. But 61.6%, that is a tick down from April. Broadly speaking, you're looking at the labor force participation rate to try to see how much of the economy in terms of the labor slack is there. Obviously, if you only have about 61.6% of your labor force actually at work right now, you're starting to wonder, is this going to be more of a structural trend that we should expect to see in the coming years? When you couple that with an employment to population ratio of 58%, and you look at the fact that that's 3.1 percentage points below February 2020, that does speak to the fact that maybe this labor market is going to look very different in the post-pandemic economy than in the pre-pandemic economy. And that could be because of retirement or even people who have passed away during the pandemic. Now, what's very interesting, though, when we look at another aspect of the report is A12. It's a table that doesn't usually get a lot of love, but this describes the number of unemployed by duration of unemployment. I found this very interesting. There is a noticeable decline in the number of people that were unemployed for 27 weeks, so roughly 6 months or longer. It was about 4.2 million in April that actually fell to 3.8 million in May. That's about a 400,000 difference, which is pretty remarkable. So one way you could think of this might be, well, if you rewind about 6 months from where we are right now, you'll recall that it was a very dark winter. It was cold. Restaurants were unable to do outdoor dining, in addition to the fact that obviously the spike in COVID cases also was to blame for a lot of those layoffs, which means that if that number of those that were unemployed for about 6 months or so is decreasing between April and May, it's actually a positive sign that shows some of those people are going back to work. However, the caveat is another reason why that decline could have also happened is because people could have decided to leave the labor force, either retiring or just giving up entirely on looking for work. So it's a bit unclear which of those two reasons is to blame for that decline. You want to kind of lean towards the optimistic look if you're hoping that the reopening of the economy is leading to those people finding new jobs. But very interesting to see, despite the lackluster and missing estimates on the top line, at least, guys.
You know, it's always so amazing. There's so much data in this report, and yet you want more, don't you? I do, at least. Like those people who went back to work, who had been unemployed for so long and then went back to work, what jobs did they go back to? Where do they live? Like all of that stuff would be really interesting and helpful to know. Thank you so much, Brian. Appreciate it.